Okay. Hi, everybody. We are live. Let me share the screen. Okay. So today is mostly dedicated to the new people. We joined the Discord group. So we focus on introducing the indicators, something that some people probably heard before, but it's good to repeat sometime. Also, I think our MicroStrategy indicator was approved because I didn't see any complaints. Usually, if there is some problem, the moderators let you know. I submitted one more time. This is why it took so long, because there were some problems, but now I don't think there are problems. So for the older people, or even the new people that just sign up, we'll start to add this indicator from tonight, when I'll give an update. Okay, so let's jump in. You can also ask questions. It's supposed to be an interactive. It's supposed to be an interactive session, so feel free to ask questions at any point in the chat. I will stop and read some of your questions. It can be on anything. You can also ask questions about the power law, anything that you want to ask. This is what these Monday sessions are supposed to be, but it's mostly focused on the indicators. So these are the most appropriate questions, but I will not mind any type of questions at all. If it is a general question, probably we are going to address it in the end. If it is a questions on the topic that I'm covering, that is mainly the indicators, then I can stop and discuss them. So, okay. And also you can ask questions about the group, the Discord, what we do, the different activities. So that is also an okay type of questions for today. All right. So let's dive in. Let's show the first indicators that we have. I'm going to turn off this one. I'm going to turn on the other one. Okay. So this is what we called the adaptive power law indicator. It's different from other power law indicators that you may have seen before, mostly because so what it does, so there are different ways of doing the same thing, and sometimes it's good to see different ways because they give you slightly different information. So this particular indicator is addressing the issue because it's an issue that is asked all the time. Do you change the parameters of your of the power law? The answer in general is no, because they have been stable. In particular, the main important parameter is the slope, right? The slope of the power law in the log graph. And that slope, you can use the slope calculated 5 years ago, 6 years ago, and sometimes we do that, and it's still valid. The important thing that you are kind of consistent, right? Once you choose a particular slope, the best thing is to stick with it because it gives you a reference point. Then if you actually calculate the slope of the support line, that is a line that is not of a general trend, but actually, you can calculate it using quantile regression. You can use it, you can do it by calculating first the central one and then going down about 60%. You can use ransack. They're all converging to the same solution, that is this very strong slope at the bottom that doesn't seem to change, and that is our reference point. And then that could have been used since like several years. Early on, it's not that the power law was not there. In fact, for the support, you can see it was there. It's just that there was a lot of noise, in particular the huge big bubbles that dominated the data. So if you're trying to calculate the slope, it will be influenced by the presence of these bubbles and the fact that we didn't have a lot of data. But about 6-7 years ago, we are getting very consistent results. And so you can stick with one slope if you wanted to. The difference is not big. In general, you want consistency. So you could choose one and then try to be consistent, and it doesn't really require an update. The question is, what if you wanted to recalculate it every day? What will happen? And this is what will happen. This is what this graph shows. You can see, yes, there is some wiggliness that is due to, this is what I was trying to tell you, the influence of the bubbles. They change, they deform. They're almost like, like a light nearby the sun gets deformed. It's almost like gravity that deforms the path of light or anything else, but slightly, right? So it doesn't change much. And it's kind of interesting because basically it's updating all the time. In fact, it gives a little bit more weight to recent data relatively to the older one. And so this is why we call it adaptive. So it's still our power law, still the general trend, but it's trying to be adaptive a little bit to the data as the data comes in. And we do this for two purposes. One, to show pedagogically, it's still the old power law that we recognize. It's not really much different from the one that you will do if you just use all the data and then calculate one single slope. So it doesn't change much. It is actually one of the strengths of the power law that is very, very consistent. The data is there, right? You could do it half data, 50%, 50%. You could see the predictions are very consistent. And also there is a practical advantage because one of the things that we notice by doing this is that we can kind of identify like almost like support and resistance areas that the price seems to follow. Like if I zoom in, I see areas like these where the price is following. You see here at the bottom. Let's go a little bit. Let's focus a little bit more. You see these are areas where the price seems to follow very closely this bottom, right? And this becomes like a support. When most in general, what happens, it's very interesting. You see, this is very consistent behavior. There is like a line where you can have a resistance or support. Then the price all of a sudden, very quickly, seems to change within like a few days. Right? So we are using a daily chart here, and then it transitions almost like vertically, and then it goes to the next one. And this is expected because for the power law to be there and to be real, most of the time the price needs to follow this power law. Right? It needs to follow a general trend that is a power law. So it's kind of interesting to see it behaving this way, right? So you see here there is a fast transition when it sits here like a kind of support. So time the support is broken, and you can actually identify these periods as a kind of almost like a way to tell where the dip is. We could put alerts there that tell us, okay, there has been like a little dip, something that maybe we should do it and make it part of a indicator to give us alert when one of these support lines is broken, when there is like a resistance here, the price corrected itself, it tried to go to the next band. These are all percentage bands, are percentage deviations from the trend. And again, here seems to be another resistance. See how consistent it is. But instead of having some arbitrary lines drawn by some person that says, oh, it should be a resistance here, I follow some of these TA people. They are never consistent. It's all kind of end waving ways of indicating where these support lines, these resistance lines are. That they do exist because people follow. Sometimes it's a kind of self-fulfilling prophecy, or maybe there is something deeper where people see certain trends and they try to follow the price in certain ways. But here it seems much more natural, right? Because it's all calculated mathematically based on this observed power law behavior of Bitcoin. Again, another transitions. Here is settled. I found another support here, or maybe resistance, because actually this is more like a resistance. The price didn't want to break through here. It's not the right time of year. This is all due to the ETFs. There was a lot of FOMO, a lot of cash injection in a very short time. Then, this is not, it's not going to break the power law. And so the power law corrected itself, all right? And right now, it seems to settle around here. So it's a very cool property of this particular graph. So these are the main power law is the blue line. We also extended it to the future. You cannot extend more than 500 points, so we go all the way here. This projected price is now the top price because I indicated in your indicator, if you own this indicator, it says projected. So I need to take off these and just do a projection of the top. It is more relevant, or maybe add another label like I did here, where I say this is a top, and the top remains around November, where this is where we are expecting the top to be, and the price is 200,000. This is our projection. It tells you what is the last. This actually, you see, has been updated almost in real time. 66,000 right now. And so it's really cool. I indicated here the time since the power law was discovered and the time that we have been actually correct, since because people think that it's a new thing. It's not. We discovered this particular power law in 2018, so it's almost like 6 years of predictions now. All these has been the time since it was discovered, and we have been consistently correct for 6 years. All these indicated by this line here. This indicator also has this white line that is what we call the full model. So the power law is a simple model in our terminology. So it's some internal terminology. Eventually, we can change it if there is a better way of describing these things. But right now, we call it the simple model and the full model. The simple model is just the power law, right? The power law is this straight line through the log-log graph. It's not straight here because it's very difficult. It's not natural. There are some tricks that people can use to make the power law straight in TradingView. TradingView, naturally, you see, if you go here, it has the log, right? So you can turn it on off, and it has the log of the y-axis, but it doesn't have a second button that will be really cool to have, where you can go with the log of time, and then it will look like a straight line. All the math we use, of course, considers the math of power laws. So you can, when you code it in the code, it's all coded like if it was a power law. So the curve that you get is the curve that you get with a power law in a log linear chart, but it doesn't show as a straight line. There are some tricks that, I have some professional people that know, if I find it. No, let me see where it is. Maybe I lost it. I can pull it up. Maybe it's this one. Yeah. So there are tricks that you can do to see how this is a company called LuxAlgo that helped me to create this. We did a collaboration, and they didn't tell me how they did it, but there is a way to do it where you create like kind of an artificial axis. And it has a limitation because, you can zoom in, etc. But you can see it's kind of like forcing TradingView to do something that doesn't do naturally. So you can do it, but I don't know how they did it. So maybe one day we can try something similar. But it's kind of cool to watch it, to see how it looks like a fantastic straight line. It is basically the power law. But right now, you can have access to this indicator through LuxAlgo. It's a collaboration that we did with them. Okay. It's okay because everything we need, it can be done. It's mostly, for visual effects. It's really cool to look at it. All right, so let me go back to our indicators. So this is the power law, and then we have what we call the full model. So the full model tries to integrate all the other information, right? Because in one level, the power law says there is no such a thing as the bubble. They cancel each other. They go up, they go down relatively to the trend, so they kind of cancel. This is why you have this straight line, because the bubbles cancel. In the other, they do exist, and we can take advantage of them, because part of what we don't force anybody, right? So I cannot stand when people say, "Oh, you're telling people to do this and this other." I'm not telling anything. I'm giving you information. Then with this information, you decide. You're an adult. You can make your own decisions. I can tell you what I will do, because it's my opinion, my choice, and then you can, using your brain and using your knowledge, because I'm not a financial advisor, I cannot give you any financial advice. By the way, I think most financial advisors are among the most ignorant people. So you should not even take advice from them, but they are at least licensed to do that legally. I don't know what that means, but whatever. But legally, I'm not a financial advisor. I'm a scientist, and sharing knowledge with you, education, information, and then with this information, you do whatever you feel fit to do. I can tell you what I do. Evidently, I think it's probably the right thing to do if I do it, but it's up to you. You are your own person. You decide what it's appropriate. And also, different people have different styles. So it's not necessarily what is good for me. It's good for you, because maybe you cannot handle with stress, or maybe it's simply for you to buy a little bit of Bitcoin every time and forget about. But we have cycles. Many people find it very comforting to know that we have an overall path and we are following this path. And for them, that is the best application. And there are other things you can do, like you can use it to do DCA if you don't want to buy and sell Bitcoin, because like I was saying before, what we consider a good idea is to sell some of your Bitcoin when we reach the top and then rebuy at the bottom. And some people don't like that, so then use these to do DCA, where you buy more Bitcoins when you are at the bottom. You can split what you're putting aside in terms of how much you buy in Bitcoin, how much you buy how much you put in USDT, for example. And so if you are close to the top, maybe you want to put aside the money because it's a good habit to do it every month, but maybe you want to hold and buy a little bit later when we start to go down, and you will buy more Bitcoin if you do that. So you can use this chart also for that. Even if you are not interested in selling your Bitcoin, you can do it to optimize your DCA. So there are many different applications, and it depends on what you do, on your style, on your plan. Make a plan, create, buy a little book like this, make a plan, write down, okay, I'm going to do this. If the price goes up, I'm going to do that. Some people can be as sophisticated as doing things with MicroStrategy, where maybe you can use options. It depends on your level of knowledge, preparation, attitude. And our group is trying to do all these. There are different channels, different channels where we discuss options, where we need to do more of that. I'm studying myself a topic. We have now, options with MicroStrategy, with the mining company. Soon we will have also the options with the ETFs. So there are a lot of instruments, and you can go from the simplest possible thing, where you just get the indicators because you like to know where Bitcoin is, and then you don't want to do absolutely anything. You just want to hodl. We don't have anything against that. Or you can do, there is from that all the way. Hopefully you buy Bitcoin. Hopefully there is nobody who say, "Oh, I like to watch colorful charts and I don't care about Bitcoin." Hopefully that is not the case. If that is the case, talk to me so I can try to orange peel. By the way, yesterday, 2 days ago, I had some problems with the internet, and the other guys coming in, fixing the internet. I needed a new modem, and I tried to orange peel both of them. And one was half orange peeled. He didn't know about the power law, so I told him about the power law. The other guy, I kind of tried, but I don't know. Maybe his friend told me, "I'm going to tell him about it," and I'm going to try to orange peeling. So, I'm trying to do my duty. So that is the idea. So, there are many applications, from the simplest possible one all the way to the most sophisticated one. And it's nice to have tools to do this. And people, because the beauty of a Discord group is that we are trying to do it as a group, helping each other, supporting each other. Yesterday I was watching a video, it was very depressing, about modern society, like everybody's by themselves. We are all against each other. This is why one of the reasons why I don't like this description about Bitcoin, like being scarce, and people fighting against Bitcoin, each other, like Black Friday. We know that Bitcoin goes up because adoption, and so more of us are adopting Bitcoin, more the price is going up. So it's more of a collaborative effort, and we should help each other and support each other versus fighting each other. There is no competition. There is enough Bitcoin for everybody, and more people get Bitcoin, more the price goes up. So there is no Black Friday. We are not running out of Bitcoin. There are no people fighting over Bitcoin. The price goes up. Good. That is great. Some people will get it at a lower price, and some people will get it at a higher price. And that is how it works. So anyway, so this is what this indicator does. The Y line is trying to integrate all this information. It's trying to integrate the fact that we have a bottom, very precise, strong bottom that is the support power law. It's trying to include the general trend. It's trying to include the fact that we have these very, very precise bubbles that seem to happen at a very precise time. We have a precise size. They seem to decay over time, right? The size of a bubble go down, and there is even an equation for that. Weirdly enough, they decaying in an exponential fashion, and you can measure how fast this decay goes, and this is how we can calculate the top here. The top is calculated by measuring this decay, and then knowing when it is supposed to happen, that is the end of the next year, and then you project the price of a trend to next year, to around November of the next year, when you say, according to the decay, we should be, about 80% above a trend. And this is how we can calculate the top. This 200,000. That, of course, is based on this idea that this exponential decay is going to continue like that. And it's a rather conservative approach, because the weakest part, people confuse, right? Some people think that the exponential decay has anything to do with the power law. Well, we use the power law to identify it, because we describe the cycle, we describe everything that happens away from the power law in terms of the power law. We say, okay, given there is the power law, then we can describe everything else that is not following the power law. And this is how we identify these very precise cycles, etc. So we use the power law, but it's not part of the power law theory. Remember, the power law theory at its core says, I don't see any bubble. That is what the power law says. Where the power law is tested is the bottom, right? If we don't go back to the bottom, and or we go too low from the bottom, or we stay too high from the bottom, then that is going to make us reconsider. We will have to go back and say, okay, what is going on? Why is not happening? What happens this time? It's also a tool to monitor the behavior of Bitcoin and see if something is different. So it's still very useful, but it's no ego in this, right? People think I am attached to the power law, or it's it's knowledge, so it's we are trying to understand what is going on with Bitcoin. It's all tools to understand what is going on with Bitcoin. There is no ego. To be honest, I would like to continue in this way, because I would like to be predictable, so we can do all these things we are doing, and we're going to do it with confidence. So I'd rather have Bitcoin being sustainable, being predictable, doing its things, and we can still gain from it, like enormously, by being consistent. If it does inconsistent things like exploding and becoming an exponential, that it does, right? Every time we have a bubble, it does exactly that. It tries to do something fun, It becomes exponential, it reaches a top, and then it crashes, right? So it does it on a regular basis. It tries to do both, but the general trend is a power law, right? That is the bottom line. Anyway, so far it's still doing the same thing. We are trying to plan accordingly with hope that it's not just hope based on wishful thinking, it's based on science that it will continue to do the same thing. It should reach 200,000, then go down to about 65,000, kind of like this. Anything between $65,000 to $70,000 is what we should do. Many people will ask, wait a second, so you're telling me that after 2 years we go back to where we are right now? Yes. And you know why? Because we should not be here. That is the point, right? We should not be here. We went there, we kind of deviated from the support, because the story should be we stay on the support line for 2 years, and we go up, we reach the top, and then we go back to the trend, right? So in theory, imagine if we were here, that will be about or even here, right? So this is where the support line is, close to 30,000, 33,000, something like that. It will not feel we stay where we were if we were close to the bottom. If we were close to the bottom, after 2 years, we go back to 65. I mean, it will not feel like we are going back to 65. We are going higher, right? We went up by almost a factor of 2 in 2 years. In fact, that is close to what we expect, because right now the power law is doing about 46% a year. So this is why you will have a factor of 2 in 2 years. That is pretty consistent. The reason why it will feel, if we go back to 65, we went back to where we were before the bull run, is simply because we are much higher now, because most of it was due to the ETFs. The ETFs, because things can happen locally. This is part of what the theory says, that there could be local events that push the price away, sometime up, or sometime down. But in general, it stays within this range of a power law. And it corrects itself. Like you see here, it touched the power law, and then it corrected itself. It didn't correct completely. Something like that happened also the last cycles. If you go to the last cycle, we also went barely at all above the power law, and then it corrected. You see, same thing here. This is part of how strong this theory is. People that don't understand it, people that criticize it, they are not aware. They didn't spend the time to study all the details. Things like this, where if we deviate from the power law for whatever reasons, I know what it is here, almost for sure, is the ETF. I don't know what this event is. I'm always asking. I don't know if anybody. I will try to find out. I will try to go back in time and study what happened there to push the price. Sometimes even just the inner variability of the data can do that. But the interesting thing that once we arrive there, the price wants to correct, right? That is really cool. And it took COVID, because this is COVID, to actually have such a strong correction that we went to the bottom, all the way to the bottom. But you see how cool it is? Another test of a theory. We reach the bottom, we bounce back, and then we went up for the bull run. So it's really cool. It's all very consistent. It's a very coherent story. It's the most coherent story. There is no other, analyst or any other. I know it sounds arrogant, but it's because I think we got into something that is really what Bitcoin does, And so it's a very consistent, coherent story about how Bitcoin behaves. This is why we call it a theory. Many people think a theory means an hypothesis or maybe a guess. No, in science, a theory is like a complete, consistent. In fact, it can basically covers everything that is known about a phenomena. And if something is not covered, then the theory tries to cover that too, by expanding the theory, by improving the theory, by integrating the new information. So the theory is a very complete, coherent picture of what Bitcoin does. All answered through the same type of thinking and terminology and ideas. So right now, there is almost nothing that happens to Bitcoin that cannot be explained by the power law theory, all the different aspects of Bitcoin. If you think it doesn't, it's simply because you don't know the theory. You didn't study it, you didn't spend time with it, you didn't read all the material. And at a certain point, I do need a place where to put all the work that we did. I'm working on it. I'm basically working kind of alone, trying to create a team around this. But there is a lot of work and a lot of information, to be digested. Anyway, the full model, like I was saying, is, if I finally arrive to the full explanation, it contains the general trend, it contains the bubbles, it contains the bottom. So it tries to do everything. It's in one simple model. Of course, is an idealization, right? If there are deviations like this, the model just tells you there is a deviation, because you can see it doesn't follow what it's supposed to be, but it cannot really predict stuff like that. It just tells you that probably if it happens, it will correct itself, right? This is what it will tell you. But the cool thing is that we can actually write an equation. This is just an equation. I don't know people realize it's all predictive. It's an equation. You can write it on a piece of paper, differently from almost anything else. That is just, so like when you do an average, a moving average, it's not predictive. It's not predictive. It's just a moving average. It's basically based on an average of what is observed. Here, it uses the data to make a model, but with the beauty, because it's an equation, you can project it in time. And so you can, instead of using current times, use future time, and tells you what it does. And this is the projected. Unfortunately, I could project it 20 years from now, but it doesn't, because TradingView doesn't allow to project more than 500 days in the future. We do have other charts offline where we do project 10 years from now, where you see what the bubble becomes smaller, all kinds of things like that. That is what we can do right now. Maybe there is some version, maybe we can do a version using years, and then we can maybe project it beyond, because I probably, instead of being days, is whatever time frame you're using. We can work on that, just for curiosity, to see what the power law is supposed to do 5 years from now, 10 years from now. I will work on that. Let's see. Because, by the way, if you join our program and you get the insider program right now is $20 a month, and we have like 8 different indicators. I have 2 more that are coming. Even if we do 30 of them, it will be always $20. So any improvement, any additions, all the things that we are adding will be always $20, unless there is some crazy inflation that we need to account for or something. So it's a very, very reasonable approach. We did it in this way because we want to share it with as many people as possible. So we have several indicators, mostly because they work well together and they are all converging information, because when you have things like that, you don't want to rely only on one indicator. Technically, this is 2, because there is a full and the simple model together. But this is why we have so many indicators, because you can use them together to give you all these information that is slightly different angles, and then the confluence, the alignment of these indicators confirms the information. So it's good to look at it from different angles. But in theory, it can be used by itself. Like, for example, if you wanted to find the tops, I will say, look at the price. The price is crossing one time the white curve, and it comes back. So that could be a good place to call the top. It's not perfect. In this case, the idea will be that this was a fake top, right? It was a fake top. This was the real top for the cycle. And that happened when it was supposed to happen. Now, as this happened, because you cannot look at the future, and now it's easier to say, oh, wow, I mean, you could wait for the curve, right? Because the curve is programmed in such a way that it's not going to peak here. It's going to peak where it's supposed to peak, because it's a 4 years oscillation. So you could wait and hope that this happens and then be consistent, because, this top seems a little bit higher and this one, and maybe it was not, I don't remember, let's see, this was 61,000, this was actually this was higher, was a little bit higher, so you will have got a better price by playing here. But even if you wanted to do this, you could also use the deviations, right? So by the time the price goes above this red line, it's probably a good idea to take some of your profits, take profit. And again, you could rebalance the portfolio where you say, look, I'm going 50-50, or you go 80-20, whatever you feel comfortable with. And you can rebalance once we reach here. So there are multiple ways of using these indicators. Same thing when we reach the bottom, right? Again, you can see the curve is flattening out, plus you have these other ones, and say, okay, the purple is there, looks the price is flattening out, I am in this region where usually we have the bottoms, and then you feel more comfortable and say, okay, it's a way of being scared where everybody else will be scared. I remember when the price reached about $16,000, everybody was going crazy. I was telling people, I didn't have a lot of followers then, but I was telling people, we reach the bottom. Don't get scared. This is the bottom, guys, because it's so clear. It's math. It's all math. Anyway, so this is what this indicator does. I will stop a second, see if there is any question about this indicator. This is what everybody gets. And by the way, you get this for only $5. So if you're not ready for the full package, which is $20, you can join for $5. You can come to the Discord channel. You can join our community, participate to all the activities, only $5. It's mostly symbolic to kind of discriminate people that don't care and will be maybe trolls from people that want to commit a little bit, but there are many people from other countries where $5 is a lot of money, so we keep it to that, and you get this indicator, but it's still pretty good. So we'll stop for a second, see if there is any question, and then we can go to the next one. Okay, it posted by Bitcoin Magazine. It's a live of a rational too. I don't know what you're talking about, El Machico. What posted Bitcoin Magazine? Talk about exponential growth. I usually don't believe it, but it talks about the market cap of Bitcoin going up fast. If somebody mentioned exponential growth, they don't know what they are talking about. And I tell you, I know it sounds arrogant, but 99% of the analysts over there, literally, they don't know what we are talking about because we have wrong tools. They don't use mathematics. They use all these tools from TA that are not good. Some of them can give you some interesting information, and I don't want to put down everybody, but the majority they don't. And I know it sounds crazy, like, okay, who are you to say that? Somebody that spent 12 years studying Bitcoin and do it in a systematic way and finding something that nobody else found. This is who I am. And it's not me, it's Bitcoin. Bitcoin does something, and if people don't recognize it, then don't understand how Bitcoin works. So it's not exponential. It's so easy to show that there is no exponential growth. There is not exponential in growth in the adoption, in the market cap. Market cap is nothing else than, particularly at this point, is price times 21 million, because we reach almost the total market, total number of coins we will ever produce. So it's all power laws. If I don't know what a power law is, if I don't use the power law, they don't know what they're talking about. Rational Root did a very good thing, that is putting the clock. He created this thing that we always mention and give him credit. I'll show you. It's this clock. And again, this is Luxalgo. They did something that I thought was impossible, to show something in a circle, because I can do this offline using MATLAB, but I don't know how to do it. Again, somebody told me how to do it. I didn't look at the code yet, but they gave me an example. So on a certain point, maybe we can have our own version of this. But right now, this is what Luxalgo did. And Rational root has a slightly different version of this, but what is missing in rational root approach, it's this blue and red line. And the blue-red line, the blue is a full model. You see how the full model touches the top here, touches the top here. These are all the tops, right? So the beauty of this approach is to show where all the tops are that are happening, like we were saying, more or less at the same time here. And all the bottoms are happening here. We also created a real clock where we say this is 12 o'clock, this is 3 o'clock, this is 6 o'clock, 9 o'clock. I think that rational root doesn't use this terminology of a clock. It's a minor thing, but I think it's cool to think in terms of time. But the main contribution that we gave to what rational root did, but by the way, he didn't invent the idea. It's something that is used in science all the time to plot things in what is called a polar coordinates. Is a great contribution was to use Bitcoin, right? Because same thing with me when I found the power law. I didn't invent the power law. We use it all the time in science. My idea was to use it to show that Bitcoin was a power law. But what is missing, in my opinion, and I don't know why it doesn't, maybe because it didn't come up with the power law, but I will not mind if he started to show the power law in his graph, because otherwise it doesn't make sense why the price of Bitcoin follows this very precise, organized pattern, this beautiful spiral. And the only thing that the only reason why it does that is because it follows the power law. And this is what we are showing here, that it does follow the power law almost to a dot. And this is why it's so regular, because in fact, there is a name for this type of spiral. It's called a power law spiral. So Bitcoin is a power law spiral. And this is why it's organized. It's even more striking, almost shocking, if you start to average the price over like 4 years, for example. So the bubble disappear, and then you can see that the price is perfectly on top of the red curve. It's like almost like shocking to watch. Everything starts to make sense once you start to understand that it follows this power law. Everything is very consistent. Anyway, so let me see the other questions. I'm curious to see if a relation with most is any good way to trade. Yes, it is. I will show you at the end. I will show you how the MicroStrategy indicator looks like, because we created an indicator. Okay. Now, even what happens, you should not use weak currencies because it doesn't make sense. First of all, Bitcoin is traded in US dollars all over the world. The majority, I don't know what it is, but we can figure it out. I will bet 90% of the money, or maybe between the US and dollar and euro, probably that is 90% of the trade. So who cares if there is some place where they use something else? Plus, probably in this country, they don't use something else, because what they care is, it doesn't even make sense for them to sell Bitcoin for pesos. They want to sell it for dollars. If they sell it, or they keep it, and then if they go to another country, because they can carry their Bitcoin with them, and they don't lose money if they transfer it in pesos. So whoever, like this guy, Luke, whatever, says this, I don't want to say bad word, because when YouTube penalizes this video, but you can think about what comes out of a bull. I like to say color. I use colorful language. It's part of being Italian. So whatever you want to call it is that, because it doesn't make sense in any possible sense. We are trying to describe how we are moving from where we are, or where we were, to Bitcoin being the international monetary system. So it's a story of a transition. So how do you think we are going to talk about it? Of course, we are going to talk about dollars and euros and all the relatively stable things. And everybody that thinks that some event where there is hyperinflation, etc., will make Bitcoin explode, it's out of their mind. I'm going to write soon an article, already thought about the title, and it's going to be called "The End of a World is Not Bullish for Bitcoin." This will be the title of the article. And it's going to make the case that we all want, and we should all not just want, but also try to work towards it wherever we can do it, to keep the currency stable and the world stable, and not, not going to a situation where, major currencies go to hyperinflation, because if that happens, it's not going to be good also for Bitcoin. Bitcoin is not going to save us from that. So we want to have a transition that is smooth. Maybe the crisis became bigger and bigger and intolerable, and then same thing that happened with the ETF. We didn't create a crisis for the ETF to come in. They came in because Bitcoin won. It was so big, so large, so powerful, it was irresistible. Same thing we want with hyper-Bitcoinization. We want to do it in a smooth fashion. And I hear some people say, well, it's not up to us. A lot of things are up to us, in terms of voting, in terms of how we handle things. Maybe some things are not, but I think, I really believe that if the US dollar goes hyperinflation, it's going to be bad. It's going to be such a crisis, maybe civil war, maybe even nuclear war. So we don't want that. We really don't want it. And all this dream that the price will jump up and will go crazy, and everybody wants to buy Bitcoin. They will not buy Bitcoin. They want to buy food. They will not buy Bitcoin. But that is a separate discussion. We can have a dedicated video to that where we can debate that. But I'm also going to write an article. So no, right now, the best, more clever and more focused approach is, the dollar's in crisis. This is why we buy Bitcoin, but it's not going to crash. It's still relatively stable. The euro is going to be relatively stable. The inflation is there. Bitcoin handles the inflation because it grows faster than inflation. And so we want these. We are almost there. Also, with people, we say we are not there. It is going to take a long time. We are talking about the next 20 years. That is kind of in the same order of the history of Bitcoin. It's not a lot of time. In particular, if you're thinking scale, Bitcoin went through 8 scales. It needs to go to 2 more. So we are almost there. So, be patient, focus. Let's hope for a better world. That is the entire idea. Anyway, we can have a different that discussion because it's complicated in a maybe different video where we discuss that topic. So let's go. If you don't have any particular question about this particular indicator, I'm going to shift to the next one because we have few to cover, so we need to move on. So the next one is basically a simplified version of this one, because this is cool. It has a lot of features, but sometimes you want something more simple and clean. And so basically this is what it is. So this is using one particular slope. That slope can be changed by way, that you can click these little bolts, and the bolts give you some level of customization. So I use these slopes. If you calculate offline and you have a code that can calculate the slope, etc., you don't like and you want to change, it's not going to change very much. The important thing is that you're trying to be consistent. These are working fine. So if you don't want to change them, stick with them. You can change the moving average because there is like a moving average here. It is color coded. Right now it's 2 months. If you make this 90 days, it's going to be smoother. See, it's going to change and be smoother. If you wanted to make it closer to the price, you maybe use 5. Then it becomes much closer to the price. And it's color coded to tell you when we are close to the bottom, that is green, when we are close to the top, that is red. So it has different applications. The lower band is about 60% from the trend. So basically 40% of the value of these. And so it catches very well all these bottoms. This almost perfectly, this bottom here. You have an upper one. Unfortunately, we don't have a line that we say this is the resistant line for all the top, because these tops are decreasing exponentially. So this is why we have this more sophisticated second model, like full model, that tries to follow the tops. Some people worked out like a channel where they basically show how the exponential decay looks like on this chart. It's going to look like something like this. It's not going to look like this because the decay is on a separate graph. But if you want to connect these tops with a mathematical pattern that makes sense, it will look like this. We could try to add that channel. I don't like channels in general because if you do a channel, then the assumption is that the price could go there at any moment, right? While we want to emphasize that when the price goes very far away from the trend, it's mostly based on a cyclic pattern. And this is why I'd rather do it with this oscillating model. But maybe we can put it, because some people like it visually, it gives you a feeling of a possible range of prices. So we can add it. We can add that channel if you like. It's something that maybe you can turn it on and off, So I'll give people the option to turn it on and off. We try to improve these indicators all the time. It's never ending job. It also has liquidity levels. This is what these lines are. These are whole like very leveraged buying positions. Look at these. It's almost like a bunch of people are aware of the power law, so they are putting, I don't know, it could be two things, right? It could be that it's a natural place where to put it. This is why we have the power law there, by the way, actually I'm saying something silly. I see this, but I'm talking about this one. So this is where this line becomes thicker, right? There is almost like a gap, but I'm talking about this one. There is big one there too, but it's very, this one probably is base. This one is an extension of the bottom of this. So this will be like more classical TA. A bunch of people think, it's possible the price goes all the way where it went last time. Okay, dream on. Is not going to happen. Well, and so they put all these orders over there, but they will never be fulfilled. We are never going back there, never. But we could go here because this is restful. And for some reason, there are a bunch of orders there. And it could be that it's a natural place where to put it, or maybe people start to use the power law to create, orders there where if the price crashes there, they buy it, and then they think the price is going up and they can make money. And same thing here, these are very leveraged positions where some people think that we are not going to cross this line, or at least not right now. As the price evolves, they will move their positions. That right now there are a bunch of people betting that if we, for some reason, we push it to around 72,000, then the price will correct and they will make money by Bitcoin going down. This is how these liquidity levels go. They are useful to give us a sense of where the sentiment of people is, what likely movements are going to be. So it's an interesting tool. You can switch it off. There is a button to switch it off and on. Also, what this does, it color codes these areas where we should be, in theory, below the power law and where we should be above. And so it's interesting because you can identify the bottoms and the tops in this way. This kind of it also has a projection like the other one, tell us where the top is going to be. So it's just a simplification of the other. This one is usually the one that I keep open on my screen because the other one is cool, but I use it mostly to find support and resistance levels. But I like the simplicity of this one. I'm going to stop for a second, see if there is any questions on about this particular one. No. Okay, so I'm going to move to the next one. Okay. So the next one is this clock. So this is basically based on this clock here that I showed you before. So imagine you have this clock, but now, I wanted to represent it in a way where I can compare it with everything else. So what would you do? What we can do is see how there is a hand here of a clock. By the way, that hand should be at the center. It's kind of a mistake. It should be more at the center there. But there is like a hand, right? So imagine I have a y-axis, and then I project the shadow of this handle, of this end, right? So there is like a very strong light source here on the left, and is projecting the light, and there is a shadow, right? The shadow, as a name in mathematics, is called a sine. The sine of this radius, and the radius is the price, right? And so if I do that, and then I describe how the shadow, right? Because if I am here, the shadow will be like 1, right? Will be 100%. If I am here or here, the shadow will be 0. If I am in between, it will be something else, right? So as the end moves around, is oscillating between, let's say, -1 when it's here to 1 when it's here, right? And so it's going to form like a sine wave. And that sine wave is represented here by the graph, is what is supposed to be. And you are going to say, well, wait a second, where is the negative part of a sine wave? I had a choice, I could have kept it negative, and then people will say, why the price is negative, right? Because this is supposed to be the price. It's the log of the price, right? So when it says 2, it's supposed to be 100. When it's 4, it's supposed to be 10,000, because it's the number of zeros, right? This is a million, 6 zeros, a million. So some people will have said, oh, why the price is negative? And so, you are dumb if you do it and dumb if you don't. So I made a choice to take the absolute value, right? So basically, imagine you have a sine wave here, so this should go down, but it's flipped. And so by doing that, we really create like, where sine, the word sine comes from, right? From sinus. It means, basically means boobs. Hopefully they don't penalize the video because I say that word, but it looks like, the female breast, right? Some guys have even this breast, but it's a breast that is growing, right? So kind of every man's desire. So it's growing and becoming bigger and bigger with time. But because the price is supposed to be the radius, right? This is what it's supposed to be. Anyway, and try to make the video entertaining, right? Come on, guys, don't. Nowadays you have to be so politically correct. I don't mind to make silly jokes. Anyway, so these things are becoming bigger. You see, because the radius is becoming bigger. The radius is represented by price, and the angle is the time, right? Is how this clock works. And so these change in basically 90 degree in the clock represents 1 year, one single year, because the entire cycle is 4 years, right? So if you divide it in quarters, every 90 degree will be 1 year. And so here we have a top. Now, when we talk about top, be careful. We mean, so it's, again, all this is arbitrary. There is math, but then within the math, you're trying to find some compromises. Like, for example, right, are you using the precise top as the beginning of your cycle? We don't. What we do, we know that that year when there is the top, it usually happens at the end of the year. So and it could be variable. So to create some kind of regularity, we say, why don't we take the end of that year as the end of a cycle? So we take the end of the year, right, the beginning, so basically December 31st or January 1st, and that is the top, what we say top here. So when we say top, we really mean the end of a cycle. This is why the top here is not exactly the physical top, right? So maybe we should come up top / end of a cycle, something like that, right? And the bottom is much closer to the real bottom in terms both of time and physical bottom, a little bit before. But usually the physical top, the real top, happens around 11, time 11. Okay, and again, you could use, so the red one here is a simple model, and you see how it forms these very nice curves. And notice how they alternate, right? During the bull, the full model is lower, like it should be, right? You see how this is lower, and the full model, because it's trying to catch the top, is higher. And again, you could use this and say, if a price crosses this line and then comes back, that is my top, right? I'm going to use that as my physical top. And usually that happens around 11. That is really cool. But again, it's a way of knowing where are we in the cycle, right? Are we close to the top? Are we close to the bottom? Think about this more than like one specific place, like regions, right? So this is where the region where the top should happen. This is the region where the bottom should happen. We label this one. Some people get confused. They say, are you saying that this is a top, right? For example, when we were close here, people were thinking, we were claiming this was a top. No, it's actually the bottom of a sine wave. And so it represents kind of a turning point where kind of we leave the bear market behind. It's not really bear because during this year we go up. But according to the power law, the only time when we go down, it's here. We have only, it's really true, right? That the meme of it, 3 bars up and then 1 bar down. It's really true because that bar supposed to represent years. The only year where we go down is this one. But it's also cool that that's why I've wanted Bitcoin to continue this, because can you imagine you have an asset and you know when it's supposed to go down and it's supposed to be here? You know, you can even make money by shorting ETFs, shorting MicroStrategy. Maybe you don't want to short Bitcoin, but why not? You know, if he was doing something regular for the entire year, you can make money even when we go down. You know, so you can make 4 bars, 4 green bars, always go up. You know, so be careful. Again, don't do degen things, don't do crazy things. Oh, he just told to short Bitcoin. Yes, what's your problem? If you do it correctly and you spend the time and you learn how to do it, you can even do that. And people have done that. Just do it carefully. Don't use 100 leverage of this when you get completely destroyed. Do it carefully, you know. And well, today we have more ways of doing that, like through options or through using ETFs. So, you know, you have a lot of tools. The beauty is that Bitcoin is fundamentally growing, even if you don't do anything. And on top of that, there are so many other opportunities that are relatively safe. This is what we are trying to discuss. We're not saying to buy some stupid coin or, you know, do some degen things. It's all very calculated, very methodic, very well thought ideas that according to your level of preparation, according to your knowledge, then you can decide yourself, maybe with some advisor, you know, like a real financial advisor. Usually they don't know these things. Yeah, maybe, you know, somebody else that you consider a good expert or whatever. And also other people, because this is why we have a Discord channel. We help each other, and we are thinking as a group that helps, because, you know, somebody has more knowledge than you in something, and it can help you to think it through. But in the end, you are the one that should make the decision, right? But the idea is that there are so many different things we can do. And this helps you with that, because it identifies all these different components of a cycle. You know, like I say here, this one can be understood like, you know, kind of almost like seasons. If this is summer, then, you know, this is autumn and winter. You know, we leave a winter behind, and then we get spring, you know, and the cycle repeats. So the spring is really when the bull market starts, right? That is really cool. And then you can project it, because again, all these are formulae. and this is supposed to be here when the bull market starts, November, December 24, when this is where we expect the bull market to start. We can project it. It's supposed to be here. You see how this is similar to this, similar to this. There are different things happening during the time. Usually we cross the power law. Sometimes we cross it a little bit early, before this date, sometime a little bit later. You see here was later, a little bit, but around this region, around this season. So if you think about these as seasons, during this season, where is this crossing? This is another kind of a milestone to understand where we are in the cycle. Are we crossing the power law? In this time, we are not crossing and coming back like it happened here, for example. We crossing and continue to go up, and then we reach the top. So this is why we have all this tool. And this other tool, that is the next one, is really cool because it's called the Hertz coefficient. The simplest possible way to use it is to identify two regions. One is basically an indicator that goes from 0 to 1, and closer is to 0, more mean returning is. Like, for example, right now, we're in this regime for a while, and you notice what happened with the price, right? The price was oscillating back and forth. Let me take out this. You can take out the halving, see how it shows where the halving are, but you can turn them off. So it's actually easier to see. But you see, we were oscillating back and forth, back and forth. It was like a general trend. Here, in this, when I show you, when discuss the liquidity indicator, I actually kind of by hand draw these. I say never do that, but I did it because it seemed that it was very consistent pattern, and we were oscillating back and forth. This indicator tell us if we are in this regime, because if it is below 0.5, it means we are in a regime where we are expecting the price to oscillate. And so there is some kind of general trend that the price is following and is oscillating around this. If it is above 0.5, then the price tends to be trend following. And that usually is associated with this very, very consistent bull run. So once we start to go on a bull run, we usually are like in exponential growth, in a very consistent growth. Sometimes there is a correction, but it's usually very consistent. You can almost calculate a mean return per day. And we are very, very close to that consistent return every single day. And that is also indicated by this. So it's a one additional converging indicator that tells us, the bull market started, we are in a consistent trend upwards, we're above 0.5. So right now, for example, everything, I know it's bullish because we went to 66 and it's cool, etc., but maybe this is going to turn around and start to go up, and indicating that maybe the bull started, it could happen a little bit early. I don't know. This is one of the regions that is more difficult to predict, because even we did all these studies where we average all the behavior over the cycles, and this is the place where we have most noise. The least noise, by the way, it's here and here. That is really cool, because this is really where it counts. We want to know when we reach the bottom and top, and that is where these models are more precise. We have less noise. Here we have a lot of noise. Right? So in general, we should stay below. We should stay close to this, but it depends on the situation. We could maybe start to move. I'm still thinking that it's a little bit too early, and it will happen more like in a month from now. There are other pieces of information that I will show you in a moment that indicates. One of the pieces of information is that we are still in this general trend that is mean returning. Now, it's a lag indicator, differently from the other one that are predictive. This one is lagging, and so even if we started to change pattern, it will take some time to react and show the pattern. But because we have done this for a while, plus all the other information, because you never want to rely only one piece of information, it looks to me we are still in this regime where the bull market is not started yet. It's cool that it seems there is a lot of energy there, where once it started, maybe it's going to be very explosive, very nice, very consistent, and it's going to happen. It's maybe this is, take it as a good sign that there is a strong desire of pushing this price up. It's just that all the conditions are not there yet. So this last indicator here, it's basically it shows the deviation from the trend. So basically, it's like what is called an oscillator, and it's showing the different peaks, the bottoms. There are many ways of doing these, and we kind of summarize them in one single indicator. So if you go under the bolt, you're going to have this drop-down menu where you can choose different way of representing this deviation. The most classical one is to take the price, you subtract it from the trend, and then you divide by the trend and then multiply by 100. It's what is called the percent difference or percent error. And it's relatively to what? To the trend, right? Because you're dividing by the trend. If you do that, you get something like this. And again, what is the usefulness of this? I would say it's mostly pedagogical because it shows how big the bubbles were. So it's kind of an historical thing, or maybe for you, if you want to study Bitcoin, understand Bitcoin, right? In his history and what he did. It has less of a practical purpose because unfortunately, it's inconsistent where the tops are. So you will, if you are expecting a top to go all the way here, where the last one is going, and then there is this exponential decay, you will be disappointed. You're still not going to miss it because, you see it's all red, we are still going in a very dangerous area. When you start to see the prices going down. But if you wanted to use the height as one more confirmation, it will be inconsistent because you see how they go down. The first one was crazy, was almost like 15,000, so 1,500%, right? Crazy deviation, or basically 15 times the bigger deviation from the trend. This one was more 1,000. This one was more 500. You see how they decay. If you use this one as the top, because it happens in the right time, it was like a second fake top, if you want. This was only 178, right? And the next one, our prediction that is supposed to be here, our prediction is going to be more like 80%. It's going to be around 80% from the trend. That will bring us to 200,000 because the trend will be around 100,000, 80%, at 120, 80% of that is 200. This is how we estimate. But it could be higher, right? But the existence for the people that don't think that the decay is real, when you look at this graph and say, yeah, the decay is real. We can maybe even draw an exponential so you see how it looks like. It looks very regular, so maybe there is something there, and it's not a fluke. But it's 3.4 point, so it could be a fluke, or maybe the regularity of it is a fluke. It makes sense because, right, it's more difficult to move $1 trillion when whatever the cap was here or here, that was maybe, if you go all the way here, maybe it was only 100 millions. I don't know, we can calculate it, what it was. But it was easier to move and push a lot of money. A relatively small amount of money at that time that is now, right? So this is why this. In fact, one clue, if I see one clue about that, see this is why these different way of representing these deviations are interesting and educational. This is why we make a list of them independently of their practical use. You can divide by price, and if you divide by price instead of dividing by the trend, let me reset this. Most of the time when you click A, it auto adjusts, but since I have to do it by hand, so be patient a second. Let me make it bigger again. See, if I divide by price instead of dividing by trend now, you see how all the peaks seems much more consistent, right? They look all kind of consistent now. And that is an indication that when you normalize by price, and so by market cap indirectly, then there is much more consistency. So part of explanation why there is this decay is due to different prices, and so market caps, and so it looks to us like it's going down, but simply was proportional. Like everything with Bitcoin is proportional to where Bitcoin was. It's something I say all the time. Everything happens to Bitcoin is proportional, and so even the peaks were proportional to where Bitcoin was in terms of price and so on. So if you divide by price, you see how it's much more regular in terms of where the deviations are. So it's one other way to look at it. And then if you want to make kind of a compromise between, because this is regular, but then the peaks are not so sharp like before, so maybe we can make a compromise. You can decide how big that compromise is. Right now, for example, I'm giving 70% to the trend, so it looks a little bit more sharp, but I'm also kind of normalizing the tops by giving some weight to the, you can make it 50-50 if you want, and then it will look like this. Doesn't change much, but okay. And you can play and see how that influences the shape of this. Volatility, same thing, because if you introduce volatility, it's a measure of also volatility. It's proportional to the price. It was much higher in the past, so it's another way of normalizing the data. So you can play with these. The most useful one is this one, decay-adjusted. It has a limitation because it's assumed that this decay is going to be consistent. So, but it should still work. Like even if they say we go 250, 300, it should still work. It's just that probably it's going to go a little bit higher than 100. We kind of did it also here, because the decay is not perfect. But it should still be very sharp and red, and the peak should go higher, than this limit here, 100. But the beauty of doing this, basically how this was obtained, basically we kind of divided by that exponential decay. So once you divide by the exponential decay, now all the tops look very regular, right? They have the same type of pattern. They reach 0 at the bottom, they reach 100 at the top. And it's cool because now you have almost like a risk measure, risk of what? Owning Bitcoin. Yes, I know that some people think it's almost blasphemy, but there are times when it is risky, because if you lose 80% and Bitcoin, it happened to me because I have been from here, I have been around since 2013, and I saw it. It's really, even if you're a maxi, even if you believe in Bitcoin, even if you love it, even if you believe me, when it was here, it was scary because we didn't know that there were cycles. We saw this first bubble. We thought it was an anomaly. We thought we would never see that bubbles again, and then we saw this. And some people like me sticked around. They thought, okay, it is going to continue. It's just another variation in the price. It's very volatile. Other people quit. So it was very shocking and very distressing. I was there too, and I could have made a lot of money if I sold. I did sell a little bit, but I could have done much better if I believe that this continues. Believe me, even at that time, this when I realized finally that yes, we have bubbles, okay, and they took all the correct actions that I should have taken. This one, I was under the shower, and my blockfolio was going crazy, and I thought, whoa, because I don't come from a wealthy family. It was like life-changing money, and I thought, okay, this is going to go 3 times more, 4 times more. Then maybe at that time I will, buy a house or do something, with that money. And this time is different. This is what I was repeating myself, and it was not different. We had a crash, and it was at 80% crash. So you see your blockfolio going down 80%. It's not fun, okay? So it makes sense. It makes sense to want to take some of the gains with the intention, don't go to Las Vegas and do crazy stuff with that money, because I heard some other people say, oh, even the people that tell you to do this and this other, you will be tempted. And don't be in this business. And if you are tempted and you know yourself, then don't do it. Try to find other things that work with you. But if you have a kind of tendency, I don't even know why you're a Bitcoiner. Maybe you should learn how to, put this temptation away and then save, keep it aside. You're not going to do anything with it. You decide buying back here. That is the entire idea. But again, I told you how you should think about this. Do all the careful things, make a plan, decide what you can handle in terms of stress and possible risk. The risk is, when we arrive here to the next bubble, the price continues to go up, but up where? Is it going to 250, 300? Possibly, but if you sold 10%, you're okay, because by the time we go there, maybe sell another 10%, and you're still making a lot of money. The fear that it's going to continue exponentially, that it's almost impossible for many, many different reasons, because the price wants to correct, because there are fundamental cycles, liquidity cycles, it's not going to happen. Very, 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 very unlikely. I mean, everything can happen. We could have a UFO invasion, or an asteroid colliding. So everything can happen, but it's very unlikely. So study Bitcoin, go deeper, trying to understand these patterns, trying to make sense for you, and then you are the ultimate person that you should listen. But this time you are going to do it with awareness. Right? I wish when I was taking that shower that I had all these, I had pieces, I have components, I didn't have a full picture. Now, I always say it's almost like driving with the lights on. We have the lights on. It's still night, because we're talking about the future. It seems impenetrable, but it's not. You turn on the lights and you have at least some direction, some idea where you're going, and this is what we are trying to do here. We have a few more indicators. Let's continue. I know it's a long video. I'm going to take a little pause to see if anybody has a question in the meanwhile. Thank you for the great work. You're welcome. Up to 100K this time. Yes, that's what seems reasonable. So El Machico say, we are not in a bull run yet. We went from 15 to 70K. So that is the idea, because it depends on this full theory that we have, right? That tries to explain everything happens in Bitcoin in a very coherent fashion. So in theory, we are in a bull run 3 years out of 4. So even if we stayed here, we will have gone. Even if we stayed, see this how I know it takes time, because unless you study the power law and you spend time, you start to think like a power lower, and you start to buy even you don't have to buy. It's just I'm giving to you, and hopefully, like I say, through my videos and my acts and trying to explain. But will be cool. I'm writing a book, but eventually, even having a website where people can go start to read, and maybe even questions. This is a very good question, right? Because it highlights how to think about this thing. One way of thinking about this is, you see how in this cycle we were super consistent, right, with this theory. And I wish we always did that, because people will think it's boring, but I don't care. I mean, if you are bored, go and pick up, go and do mountain biking, go to do something, parachuting or something exciting. With your investment, you want consistency, so it would be cool if it was always super consistent. Sometimes it's not. Like here, it was there, it went there, it had this level of consistency, it went there. How did he know to go there? But it left, right? And then the consistency comes in, you want it to correct, so it's not perfect. And the consistency comes in having this big correction and didn't go below that. It just reached here and then bounced back. Consistency here, we left, reached the top, we went back there along the support line. How does he know, right? Do you see how consistent it is? Now he left. I stayed there for some time. This was pretty consistent, right? Stayed to the support, but then the end of the year, of last year came, the ETFs got approved, they injected a lot of money physically, but also FOMO, so a combination between injecting a lot of money fast is not going to change the general trajectory, because they even did calculations of what it will take for changing the general trajectory, much more than ETFs. And the ETFs will have to put 2, 3, 4 times more money that they are doing right now just to stay on the power law. So we need ETFs and more to stay on the power law. But they did it because they were creating the funds and they had to have all these reserves. They did it very fast in a short amount of time. Plus all the FOMO associated with it push the price. See what happened? We reached the power law, it corrected. Right? It wanted to correct. So we could have deviations, but I will not call this a bull. Why? Because we have this very precise, very consistent, maybe simplistic language of what a bull is. A bull is when we live in a consistent fashion. The support seems to happen at a very precise time of year of a cycle, and then it reaches the top. It usually lasts 1 year. So this doesn't classify all the different things. You can call it a mini bull if you want it. It was a mini bull, but then it corrected, right? And it could correct even more. So it doesn't qualify as one of these bull with the big B, right? That starts here. Is when we say it's the full bull. The full bull starts here. It's still bullish behavior, right? Because like we say, in theory, even if we moved along the power law, that will be still bull, right? Because we go up. In fact, what we will have happen? We will have gone from 16,000 to 33,000. So almost doubling the money that, in 2 years, that for most assets is crazy, right? It's a crazy type of investment if you double your money in 2 years. It took the SP 500 25 years to go 4 times up. And this is doing 2 times in 2 years, right? This is how amazing Bitcoin is, even when it does things like this, just moving along the power law. It went a little bit higher because of the FOMO. You see how to reason about this thing? But we say, well, the real bull starts here. The real bull starts here. It's a more consistent, it's a simplified version, of course. Every time you're trying to make things in a more simplified version, you're going to get, some simplification of what is going on. But it's a very it's not a made-up story, because it's all based on data and very precise definitions of what we consider a bull, how to recognize a bull in terms of the deviation, in terms of a consistent behavior, in terms so many things, even the Earth coefficient. The Earth coefficient will not have told us we are going back and forth, and the nature of a type of data if it was a bull. The bull are characterized by these being Earth coefficient being above 0.5. Today, I calculated this other quantity, but again, one day we can make an indicator called the Shannon entropy. And the Shannon entropy tell us, the bulls are characterized by this type of value of a Shannon entropy, and so on and so on. So, put everything in context, and then you can accept this terminology if you like it. If you don't like it, then make your own. But, we're trying to make a coherent story based on the data we observe. The other indicator we have that also show we are not dealing with a bull is this one. That is the liquidity. So how did I do this indicator? I did this indicator by looking at the relationship between Bitcoin price, and I'm going to show you how it looks like overall, because it was zooming a lot. It's the general behavior between the price, and let me turn off these Bollinger Bands because it's easier to see if you do that. So the white one is the price, right? Just the daily closes. The red one, this line in between the usual power law We are drawing the deviation. We are drawing another line here, indicating basically a large deviation above the line. Like I say, there is no a single nice line like there is for the support. There is no one for the top. But this line represents where if we are above that line, we have a pretty hot price. What is interesting is the purple line. The purple line is this a little bit more complicated model than the power law, because the power law is this very, very beautiful, simple relationship, right? Like y equal x to some power that for some people seems complicated. But imagine, describing the behavior of Bitcoin with a simple equation like that. It's shocking, right? If you're trying to do the same thing between Bitcoin and then you have global liquidity and you want to explain the price of Bitcoin through global liquidity, it's not that simple. There is not such. I try to find like a power law. Maybe some people show, there is this relationship. It's always like taking a smaller quantity of time. If you take a small quantity of time, you can fit it with almost anything. In particular, things that look like straight line. It's very difficult to fit something that looks like a straight line if you take huge amount of time, like 15 years, 8 order of magnitude. That is why the power law is so amazing. But if you try to do it with global liquidity, it doesn't work. It again shows how difficult it is to get these power laws, right? It's not trivial. And so there is not a power law between the price and global liquidity. It's more complicated. There is a nice relationship, and they wrote an entire article because, by the way, every time I do something, usually I spend days and days, and then I write an article and trying to explain you my thinking, the calculation I did, all the logic, again, differently from a lot of other people that don't tell us even what we're doing, or maybe they don't even know what we're doing. I'm trying to explain it to you. So if you go to my Medium or you go to my website, it's called bitposeidon.com, I have an article where I explain how I derived this model. So the model is trying to tell us basically, given a certain change in global liquidity, and by the way, what is considered global liquidity is a little bit arbitrary. Different people include different things. Are you included all the M2s? Are you including the banks? I try to include as much as possible. And then the problem with that is that a more clever way of doing it is giving different weights, right? Maybe the M2 for the United States is more important than one in, Korea, so it's something that I'm going to do to improve the model. But right now, everything is weighted in the same way. That is one of the limitations of the model. But if you do it in that way, then you get a relationship between global liquidity and price, and then you can use it, and this time differently from the power law that is simple, so it's easier and also more reliable in extending it to the future. It's a little bit more complicated in extending it to the future. So take it with a grain of salt. But in theory, the purple line should say, okay, given the global liquidity right now, this is where the price of Bitcoin should be. And the idea is that if a real price is above that, then it's overvalued. And if it is below, it's undervalued. Or another way of thinking is if a price is above the purple line, we don't have a liquidity to support that price, and probably is going to go down. And you can see that is the case, right? In fact, for example, where is one of the places where you will expect most a correction? Here, right, at the top. Look at what happened at the top. Every single top is characterized by a lack of liquidity. That is almost like a definition of what a bubble is, right? That where there is a disconnect between, the fundamental of the price and where people are trying to push it. It's all FOMO. You see, bubble here, another bubble here. So all the bubbles, it's cool because it's another way of identifying where the bubble is. If we start to see, it's almost like a mine canary that is telling us, whoa, we start to see a lack of liquidity. Maybe we are close to the top. It can be several months before, but we know that now we are in this regime where maybe you want to follow the price, and maybe you still want to hold on Bitcoin until all the other indicator tells you that is the right time, but you're getting ready, so it's kind of nice early alarm that we have that something is going wrong with the price. And this is another reason that we know that it's not going to explode, because if there is not the liquidity, the price is not going to explode. So it's going to be very, very helpful. But also notice another pattern. Notice what happened before the bull run starts. We are always in green. Because it makes sense. You want to have liquidity to support. You see the bull market started here just after COVID. It was a bunch of green, right? So that is one of the patterns that I'm noticing, and it seems to be logical and consistent with our story, right? And so we are expecting for the bull market for this to switch to green. And for some time it was doing the right thing because the liquidity was following this orange line. I didn't move it because I want to be honest, right? To say, oh, hopefully we'll continue, because it was like we had many meetings like this where for weeks I was telling you, look, it's going up relatively to this orange line. Then almost for fun, I draw a line that I usually say you should not do because you should have a computer do all these lines. But I say, it looks like we are moving, and I didn't move it, to be honest, to show you. You see, now it's not doing what I was saying it's doing. So I'm trying to be as honest as possible. But the line helps us to indicate that something is changed, right? So it's still nice to look for patterns. But this other pattern doesn't seem too broken, right? Yes, we are going up right now. Maybe it's the start of breaking this pattern. But it's, the people who are cheering this don't realize that something is missing. What is missing is the liquidity. In fact, the liquidity here went down. And so I don't think it's anything to worry about, because probably there will be some correction. And then we will still see this green appearing. But it's not following the nice little trend that we were following before, right? Being cool if these two guys went up, and this went up and this went down. Then we met somewhere, we started to have some green, and then we will be ready for the real bull market. It's now happening like this. Let's see how it happens. I will be very surprised that a real bull run starts with the liquidity missing. It could be something problematic about my model, because you always have to be open for that as a scientist when I'm going to admit if I am wrong with something. But I don't think so, because if it was like 2 years from now, 3 years from now, I will tell you the model was so complicated that we have to be careful about how much we extend it to the future. Maybe we need to update it and stuff like that. But right now, I made it just a few months ago. I think it's still valid. And the story that it was telling us that we need the liquidity to support the bull run makes sense, right? Makes sense logically. So let's monitor it. I do want to go deeper in this liquidity thing and improve a model, maybe giving different weights, to the different contributions. So maybe there is a way of improving it. But right now this is the information that we are getting from this. I'm going to stop for a second, see if there is any question, and then we go to the final indicators. I'm sorry, you can always come back. It is asking how long it's going to be. I'm trying to cover everything. We usually take a couple of hours to cover all the indicators because we have so many. But I'm always thinking people can come back and watch it. So you're not obliged. I thank you to stay with us and stay up late. But if you cannot do it, just come back. People are asking all the time for the timestamps. I'm going to see if I can figure out how to do it with AI, because AI should be able to do that. By the way, somebody showed me that there is a place where you can put the video, and then the video will give you a summary. ChatGPT will give you a summary, and the summary was so cool. I actually read it. It was like a long video, and they did a very, very good job. And so you can also do that. Well, I will try to do it and then post the summary. You can read the summary or read along. But I will try to get the timestamp so you can go back where you left and go back to the video. But yeah, to go to sleep if you need to go to sleep. Don't worry about it. Thank you so much to be with us. Okay. Plan B. Plan B doesn't know anything. Plan B, it's saying stupid things, because in particular its model is trash. I tried to show it so many times that that model, because if it was somebody else with a slightly different angle and was contributing positively, and it was maybe, like for example, that beautiful contribution of rational root, he did an amazing job. That I will be always the first one to say, wow, this is why I copy stuff, right? Because trying to following somebody else's work is one of the best recognition of the validity of somebody's work. And if you give a right attribution, then it's perfectly fine, right? I mean, this is how science works. Newton say, I'm a dwarf on the shoulders of giants, right? This is how it works. And you have to give a right attribution. So I will be always the first say, the rational root came up with the idea of a clock, of a spiral, and I just added the spiral. I explain why it works, why it works, because it's a beautiful power law spiral. But with Plan B uses power laws because people don't realize it's based on power laws. It's based on the power law between the price and this quantity S2F. But I have shown, why I shown it, because as I did it with rational root, where I studied this model and trying to make it mine and trying to understand it, I try to absorb it, what is good, what is bad, how can I improve it. I tried to do the same thing with S2F. In the beginning, I was super happy. I say, whoa, because I discovered power laws all the way to 2013. I say, wow, one more power law, be welcome to the family. And then I discovered that it was garbage, because there is not really a relationship between issuance and price. It's an illusion. And I made videos, I made posts, and it makes me sad because, if somebody pushes something not true about Bitcoin, I don't like it. I don't want it, I want to understand the truth about Bitcoin. So there is no such a relationship between issuance, so the reduction in issuance. There are no supply shocks. There is nothing like that. He emphasized the importance of a cycle, so that if you want to give something to Plan B, let's give him that. He was one of the people that say cycles are important, but not for the reason he says they are important. And we also made a video explaining why we have cycles, why they happen. They don't have anything to do with scarcity or the supply reduction. There are other reasons. And if you want to watch the video, it's in this YouTube. There is a series called The Physics of Bitcoin. And watch it all when you have a chance. And in particular, watch that video about why Bitcoin has its bubbles. And it doesn't have to do with what Plan B says. The problem with what his model is that it becomes an exponential model. So eventually the price goes exponential if we follow what Plan B says, but we don't. And every time, every cycle happens, he has to adjust. And in fact, he had to adjust already twice his model, because otherwise it will not work, because he's forcing it to do something that Bitcoin is not doing. It's not exponential. And so he has to readjust. If he was consistent and he applied it in the previous cycle, because he applied it in 2018, right? If he started to use 2013, right now we will be like $10 million or something like that. It's already not working, and even if you just you follow what he said last time, this cycle we should go to 1 million, right? And we are not going there. So it doesn't work. Bitcoin will be that part. that it will be as big as the housing market, so the 100 trillion. That is the other thing that is cool about Plan B. So because when people contribute positively, we need to admit it, So two things about Plan B. One, the importance of cycle. So I'm going to concede that to him. Thank you very much, Plan B, to tell us that cycles. People saw that before, but he made a big deal out of them, and he's right. They are a big deal. Not for the reason that he claims, but they are. So let's give him that. And the other thing I should give him is this 100 trillion, right? That is even in his screen name. That is good because, yes, that is a very good goal for Bitcoin, because I think we will reach 100 trillion. That is basically the housing market. I think the housing market is 180. Correct me if I am wrong. It should be around 180 trillions. When we reach that value, my theory says, that is where I go a little bit more in speculation, is that this is when we will have a hyper-Bitcoinization. Because by the time Bitcoin will be so huge to be basically kind of like almost all the wealth on the world, that nation cannot ignore it. And so they will have to do something like, because if they don't, then they will lose anyway. People will start to switch anyway to Bitcoin and start to do everything with Bitcoin, and nations will be left behind. So kind of what the ETFs did, right? They joined because they couldn't defeat it. They tried to defeat it. They tried to talk bad about it, trying to say all kinds of horrible things about Bitcoin, and then they couldn't defeat it, and Bitcoin won. Bitcoin is almost like these Zen warriors that don't even need to fight. He's there sitting, doing his thing, became bigger and bigger and bigger, and he wins everybody because they see this big giant, say, okay, it's better not to fight the giant. What can we do? And they join. They became followers. They go from being enemies to followers. I mean, I wish I was like that. I wish I could win all my battles by being cool and nice. And Bitcoin is a teacher. It's teaching us this stuff. To be that kind of cool system where I don't care. I do my own thing. Eventually, you will join me. You will become my friend. And so this is why Salos was talking bad about Bitcoin, and then he joined. And he became like, now it's a prophet and a fanatic of Bitcoin. Imagine if you could do that with everybody. Your haters became lovers and so on. This is what Bitcoin does. This is how powerful Bitcoin is. It's very difficult to be like Bitcoin, but let's try to be like Bitcoin. And Bitcoin, when we reach 100 trillion, will be like that for the nations. The nations will say, we cannot ignore this thing, because if we do, then people simply automatically switch to Bitcoin, and we really have no control. And so they don't still have control, but at least they pretend to have some control, and they say, okay, let's peg the dollar to Bitcoin. Let's peg the euro to Bitcoin. This will, I think, it will happen when we reach 100 trillion. So that I agree with him. With that component, I do agree with him. All right. So I think you learn one thing we can do. And by the way, these are oscillations. These are oscillations of the of whatever you see above. These are basically differences. The white line represents the difference between the white and the purple. The blue line represents the difference between the purple and the power law. The orange line represents the power law versus the price, kind of like the things we saw before. And the red curve that I didn't add yet, but I'm going to add, is this famous owl cycle. And so Howell is like an expert in liquidity, and he identified these 65-month cycles. And I don't know how he calculates them, but I kind of stole from him the sine wave, because he had this sine wave that was supposed to represent the cycles, like again, kind of a simplification. And I noticed where it was peaking, I noticed where it was bottoming, and then that is 65 months. So I tell the computer, do these 65-month sine waves with the peaks here and has a low level there. And so I kind of imitating the hour cycle. I hope, I interviewed him. He was in one of our shows. Hopefully he doesn't get mad because, again, I'm going to label it. I'm going to give him credit. It's public information, so why not? But the cool thing that this cycle is going to peak for the first time in the Bitcoin history when our Bitcoin cycle peaks. So it could be a good thing, right? It should be that we have a ton of liquidity as we go up and reach the top. So this should help that these two are synchronized together. I do want to study more liquidity. In the beginning, I was skeptical because I thought I want to do everything internally, just internal Bitcoin data. But because Bitcoin interacts with the world, it's important to understand how it does that. So I want to go deeper. But again, what is different with me from other people is that I'm always researching, I'm always adding more information and trying to collaborate with other people that know more than me. I'm trying to make it a science. Maybe one day we will have an institute to study Bitcoin as a science. That is one of my goals. All right, let's move on. Let's go to the next one. That is this one that is based on basically returns or volatility. Volatility is basically the standard deviation of the returns. Returns, what do we mean for returns? Returns are, you take the price today, you divide it by the price yesterday, and that number can be below 1 or above 1, right? If it is above 1, Bitcoin went up. If it goes below 1, Bitcoin went down. And this is what you see here, these little gray, crazy lines that look very chaotic, right? They look very random, and like there is no real pattern there. This is what they represent. I drew the volatility, basically the standard deviation, one standard deviation above, one standard deviation below, but these are the red and green line. So you kind of can use it where when you see some spikes above the red line, probably that is a very good day. If it is below, it's a bad day. So maybe you can use it as way of identify bottoms. So like dips, like local dips. So it's interesting indicator. I'm comparing it here with the first indicator that we have. We can use also the other one. We can switch to the other one. I don't know if I have it here. Maybe, yeah, we do. Let's turn the other one on. Now you can compare it also with the other one to see where everything happens. So it's pretty cool. But the white line, what the white line represents are averages of these returns. So you can start to see there are patterns. Like, for example, notice what happened during the bottoms. We reach, this is the one line where they basically, if you are above, you have positive return. If you are below, you have a negative return. If you go to the bolt, you can adjust how big this moving average is. Right now I'm using basically 5 months of 150 days. This is what the white line represents, the average return. So over 5 months. Notice what happened if you go all the way to 5 months. Almost never we go below that green line. That means if you look back 5 months to almost any place beside the real top bottoms, like this was a bottom right here, this was a bottom, barely we went below, around this area we went below the 1. That means everywhere else we were in positive territory, right? It is really cool. And it works like if you go back that amount that they're using to average, right? So 5 months in this case. So it's really cool. It's mostly these are associated with the bottom. It's another way also identifying the bottom, right? Because you can say, hey, when we reach this green line, we have a bottom. I need to add this green line. I forgot to add this green line. I kind of draw it, but I'm going to I make some notes of improvement that I need to make to the indicator. This is one of them. I need to add this green line, so you guys have it. It's almost a way of identify the bottom. See, bottom. It's really cool. Now the tops are where you have this, right? You have like tops of it, because it makes sense, right? So you go look backwards. These will be places where your returns are the highest, right? So these are daily average returns. So like say, oh wow, I was making a lot of money recently. Well, because we were along one of these bubbles, right? So that is not a typical return for Bitcoin. What is a typical return for Bitcoin? It's the blue line. You know what the blue line is? The blue line is the theoretical returns from the power law. So if we were just moving along the power law all the time, this is what we will get. That will be the average return. And you see, because people talk about diminishing returns, there are two types of diminishing return, right? There are the diminishing returns of the top, and sometimes people confuse the two. Maybe they are related. I don't see a way of relating them directly, besides, like we said before, that if you normalize by price, then kind of the top becomes consistent. So kind of they are related, but not really. But you see how the blue line goes down in time, because early on we were making like more than 1% a day. But if you compound that, it's like an enormous quantity of money. Every year you could have made, like many times your returns, many pairs your investment. But you can see over time the blue line goes down. And notice what happened. That is another way of showing how powerful the power law is. It's not just some straight line through a graph. It's really a statistical property of Bitcoin, because otherwise it will not show up as this kind of average behavior of the returns, right? The returns are actually a very strong statistical quantities, always used in finance, and usually it's actually a way of killing a trend if a trend is weak. But it's so strong here that because you have this general decay of the returns, they do follow in average the blue line. You see, they oscillate around the blue line, but in general they follow the trend. They go down. They started to become trend. Not just also oscillating around, but even the range, right? So this range was enormous. This range becomes, because it's also a measure of the bubble. See how these oscillations are related to the bubbles, right? The bubbles became smaller, so these large variations became smaller, but the general trend follows. If we average, right now we're averaging over 150, we started to average longer and longer, you will see even closer to this path. It will never be perfect because there are the bubbles. So, but it's really cool. So this blue line represents the average return due to the power law. And right now, it's about 1.001. That means 0.1%, right? If it was 1.1, it will be 10%. 1.01 will be 1%. Right now it's 1.001. That is mean two zeros, right? It means 0.1% a day. So this is what we make if we stay on the power law. We make 0.1% a day, and you will think it's very small. But when you compound it over 1 year, it's about 46%. So we make about 46% a year by staying on the power law, if we just stayed on the power law. That is kind of what we make if you forget about the bubble, because remember, we always go back to the bubbles anyway. I mean, to the power law anyway. But if you care about the bubbles and you want to take some of your profits here, that is another way. This graph is another way to understand why it's such a good idea. Because you know what happens during the bubble? You see, look what happened. We leave the blue line and we start to climb up. Where time we almost make the money we were making, in average, but you have to average it over this entire period. So somewhere maybe in between, right? We were making almost in the beginning, right? We make a lot. Think what happened during this bubble, for example. We were making close to 0.4%, 5%, almost 5%, 0.5% a day during this bubble when you average it over the entire bubble. And so, compare that with 0.1%, and you see it's 5 times more. So there is a period in the Bitcoin history where, during these bubbles, we make 5 times more money. Why not to take some of the profits, and so we can buy more Bitcoin. This one was more like 1 point something percent a day. The first one was 1.2. It was crazy. The next one, if we go to 100,000, right, if this calculation is correct, then we are supposed to gain 0.33% per day. That is what it's estimated growth every day. That is about 3 times what we're making right now. So again, maybe it's not as crazy as in the previous bubbles, but again, it's a strong motivation to tell you, whoa, for 1 year, my returns are going to be 3 times more what I'm expecting in average. Why not to take advantage of this, right? So it's another way of making you understand that we can get the best of both worlds. We can get the safe, because I think right now Bitcoin is the safest investment in the world, safer than gold, safer than anything else. So we have a safety of Bitcoin and the volatility of something more crazy. It's not crazy as some of the crap coins that we are over there, but still Bitcoin has a lot of volatility that we can use and take advantage of. So if you do it in a balanced way, because all the people that criticizes, say all the BS, they never listen to this video. You see how I'm trying to make it as reasonable, as careful, because that's how you should do it. You should do it. I never tell you, oh, do this, that, follow me, get crap of money. I never say that. I tell you the opposite. Be careful, be thinking, study, try to replicate the results. I'm trying to be as careful as possible, but I also want to push you a little bit. Again, non-financial advising, but I want to give you some inspiration to say, well, maybe if I want to multiply my Bitcoin, because the truth is also that if you have 0.1 Bitcoin, the same people that tell you, oh, don't trade, don't do this, don't do that, they also tell you that you're going to retire with 0.1 Bitcoin. So they are lying 10 times, 100 times, 1,000 times more than anything I'm saying. And no, I'm not lying. I'm not telling you any lies. We are saying bad things, or exaggerating, or giving you bad advice than anything I'm saying. Because telling you you're going to retire with 0.1 is creating a sense of illusion and expectation, and you will be very disappointed. Plus, you're losing opportunity, because you can lose in 2 ways: by taking too much risk and sometimes too little risk, because it was a risk to buy Bitcoin in the first place, right? If you didn't take that risk, if you didn't jump in, if you didn't take that step, you will not have had an opportunity. So the same thing here. We, unfortunately, if we were early on, we could all buy 1,000 Bitcoin with almost nothing, sit on them and be okay the rest of our life. It's not the case anymore. So you're still having incredible opportunities, but maybe you want to do a little bit more aggressive moves, again, within rationality, within being careful, that maybe give you an edge relatively to other people. That is the entire thing. I don't think anybody can come listen to this talk and say there is anything wrong with what I'm saying. So I stay with what I'm saying right now. So going back to this indicator, right? So what this indicator does is going, as we are coming close to the bull market, this white line is going to climb like it did before, right? Where there is a bull market. So it's going to leave the first good sign that we're entering a bull market. And I mark here where the bull market I think is going to start and when it's going to end. And then we are going down for 1 year. So when we are entering the bull market, we are expecting this white line to, first of all, the first milestone will be that we cross the blue line, because we need to do more than the average return that we get through the power law. And then eventually needs to cross this green line. This green line represents the 0.33 that I told you about, right? If we kind of climb there and then stay around that, or maybe, because we spend half of the time below, we will need to kind of catch up and we will be above. So we need to stay there, kind of having this green line, kind of a middle of where, see how here, the middle was maybe this one. So the green line will have to be the middle of, imagine I'm projecting this in the future, because this is going to be the next year, starting November. We need to cross this green line and stay close or above that line to have any hope that we reach 200,000. If we go above the purple line and stay consistently above the purple line, that is an average return of 0.66 that will bring us to 500,000. I put it there as a reference. I don't think we are going to do that, but it's there. I could have put a million, you can imagine, it's even higher. I think 1 million is like 0.77, something like that, 73. So these, and the cool thing about this is that we don't even need to reach this by the consistency and the steepness. You see how steep it was, almost like kind of a straight line up. By the steepness of this curve, we can kind of infer where we are going, because usually once the bull market starts, you see here, it's very, very consistent. Yes, there are oscillations, but you can almost draw a line through here. So you can kind of extrapolate where we are going, how fast this growth will be, and kind of estimate if we are on the right path, if we are actually going faster, or whatever. So it's a really cool indicator. Okay, I'm going to stop a second, check if everybody died. We still have a good number of people. Don't talk about plan B around here. You can talk, but you know what the answer will be. Plus, today I was in a good mood and I gave him a couple of compliments. I say he was right about the cycle. He was right about 100 trillion. I think this is all what he's right about. But anyway, let's talk about the last indicator. We were waiting for this to be approved. I think it is because TradingView has these moderators, shout out to the moderators. They are doing this for free. So it's a little annoying process sometimes, because, you wrote this indicator and you think it's cool, and then they say, oh, you didn't explain it good enough. And usually it's like referees in a paper. You get mad at them when they tell you, you didn't do this, you didn't do that. And you think, what do you mean? I worked for this for years. But they are right. It's one of these places where you can improve a paper by listening to the referee of a paper, because they usually have a good point, now to explain something better, or maybe double check some calculation. It's the same thing. They give you feedback, not much in the code. They don't look at the code. They look at how you explain it to people. And they are very careful about, maybe scammers and other things like that. So, and by the way, talking about scammer, please, I beg you, okay? If you join the Discord, maybe I need to repeat this every single video, in the beginning, the end, in the middle. Be careful about scammers. There are a ton of scammers. They don't do it just with me. They do it with everybody, even people that don't do trading. Like, I think I read somewhere there was a Discord group with Johnny Depp, and they were impersonators of Johnny Depp, saying they were Johnny Depp and he needed money. I don't know why people will think, I don't know, maybe during the trial, I am in this trial. Can you help me? Can you send me some money? And people thought they were talking with Johnny Depp and he was talking to them, and they were sending money to Johnny Depp. Okay, there are people thinking, pretending it is me. Double check. We have a server in common. Double check my name. In doubt, contact me directly from the server. Don't do it indirectly. And never, even if it is me, even if I can say, look, I have this incredible thing that we can make a ton of money. Even if it is me and I prove you that it is me, don't do that. Don't send money to me, or in particular, anybody that pretends to be me. And sending money means joining some, individual class. If there is a class and I'm making a class, hopefully it's a free class. If it is not free, because I'm thinking maybe everybody can pitch a couple of dollars or $5, so we eliminate the trolls, then I will make it a public announcement and everybody will have a chance to join. I will never contact you personally and say, hey, Robert, I have this very great deal for you. You are the best of my followers. BS like that they usually do because they want to make you feel special. Don't do that, okay? Don't join courses. Don't join mining pool. Don't join anything at all. Tell them, fuck you. Hopefully this doesn't demonetize this video, and if it does, it's okay. Tell him that. Maybe use an Italian bad word and report the bad guy. Okay, report him immediately. I don't know. It seems that Discord doesn't do anything, not even X. I reported a ton of people, but please be careful because, the day happened to somebody and it was bad for that person. I couldn't sleep myself. I felt so horrible. Please, please, please. Okay, I cannot do anything if you don't help yourself. They don't do it just with me. I was in different group where I was contacted by the fake person that was running this group like 20 times, and I know that it was a cheat. It was a fake person, so please don't do it, okay? It's part of learning about being in the crypto space to resist to temptation. If it is too good of a deal, probably it's almost for sure a scam. And anyway, don't do it, just be careful. Okay. So anyway, they try to, I was mentioning this because they try also to avoid people making some fake indicator, etc. So, but I think we got approved, and I will add to everybody that joins, new or all people that have the full package where you get all these indicator. No matter if we have 100 of them, you will always get for the same price. What this indicator does, there is a power law between Bitcoin and MicroStrategy. Now, that power law probably is being violated right now because MicroStrategy is pushing hard. But remember, there is a violation of a power law also for Bitcoin when we go in the bubbles, right? So now we will have to see, does it come back? It's such a new thing that we will need to monitor it, right? We are going to do often some studies, check if a power law is still there, if it is violated, how much is violated, if it is like a start to behave like we have bubbles inside bubbles or whatever, But right now, what is this model is based on the observed power law, and basically because there is this power law, basically says MicroStrategy equal Bitcoin to some kind of a power. That power is 1.3. So and then you can say, well, because Bitcoin is also power law, so you have open parentheses, the power law of Bitcoin, that is 5.8, whatever it is, to the 1.3. What you do, you take the exponents, right? You multiply the exponents. So you have 5.8 to multiply 1.3, you get 7.2 something. So this is what the green line is. It's a super power law, but instead of being 5.82, it's 7.3. So it's like saying that if you really want to understand MicroStrategy, you can understand it almost like a power law. And by the way, you see what happens if I go beyond 2020. Sellers started to buy Bitcoin here, right? I think it was August of 2020. And before that, it was not following, right? You see how this Bitcoin was doing his own thing, because the model doesn't know, right? The model thinks that he started to buy Bitcoin from, I don't know why it stops here. You should go all the way there, because I think I should use actually the entire history of Bitcoin. I'm using some exchange. It's still valid. In fact, I'm still using you see how it goes back, because it's trying to find the place where Bitcoin was created, the Genesis block. The model really goes back to the Genesis block. But I'm noticing now that I'm not using the entire history, but I should use the entire history too. But this is what we will see. You will see the divergence between what MicroStrategy was doing, that is basically, this is why he went to Bitcoin, right? Because it was just flat. I was not doing bad, but was not doing anything. It was flat for years, right? It was not doing anything special. And then he's decided to buy Bitcoin, and now it's climbing, It's really cool. And you can see they're more and more connected, right? This is the blue line. It's a real MicroStrategy. This is the model. Say, if a price follows this relationship, we should see this. We should see the blue line. So times where the red line, that is the model, is above, is okay. It's MicroStrategy is undervalued, and when it's above, it's overvalued. So you could use it, to buy when it's undervalued and then sell when it's overvalued, stuff like that, and or maybe something that you can use to consider options, how to play with the options, and other things like that. We will go deeper, we will try to understand better. I want to understand options myself. Maybe we can make one of these alpha, omega, whatever model based on options, but I need to pick up the topic myself. I read it, I have like a general knowledge, but we can go deeper and create some more sophisticated tools for people who want to use options. I did other indicators. This one is a quantile, so this is similar to the adaptive one, where it's adaptive, but it uses quantile. That is actually a cool way of doing it, because again, tell us, like basically larger and larger deviations from the standard, from the distribution, but it calculates the distribution up to that point instead of assuming that there is like one single distribution. I'm going to add this to the list, so you will have one more. I do something else with Bayesian calculations. We didn't explore yet on-chain, but I'm going to start to add on-chain, like addresses, hash rate. I don't think there is much in terms of usefulness, like on a daily basis, but they could be useful for pedagogical reasons. So you can see they also follow up overload, they are all cool. It will take time, but we are going to add, I'm trying to add one per month, something like that. Then you're going to have like a big collection of indicators that are all interesting and help us to understand Bitcoin. Okay, we are done. So I'm going to take a couple of more questions, and then we can call it a day or a night, or whatever it is. Any questions? Maybe we answer everything already. Okay. All right. If you don't have any questions, then comments, then we can quit here. I don't think we can ever make these meetings less than 2 hours. I will try to add some timestamps so you can go back and listen to the video in pieces. But yeah, I don't mind, because hopefully you learn something and this is useful to you. Okay. Yeah, my pleasure. It's a great pleasure. I thank you to actually be with me, because I would not be able to do this if it was not for you guys. Thank you so much, everybody. All right. See you soon.